uncertainty brings a lot out of everybody. And there's a lot of uncertainty right now, that is for sure. And with the Strait of Hormuz, that's all everyone's talking about because nobody knows what's going to happen.
Banning our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Las Vegas. We're at the ICE Experience. There's the Sphere. My good man over here was nice enough to let me just take a quick little gander out here and start this video. The mortgage ecosystem has an absolute abundance mindset. We had our executive summit yesterday and today, and we have, for all intents and purposes, the conference is kicked off. And so I am about to take you into the meat grinder. So you'll see a bunch of people. Thank you, brother. And the reason I want to talk about abundance versus scarcity of mindset is because if you think about fear-based, comments and actions, like uncertainty brings a lot out of everybody. And there's a lot of uncertainty right now, that is for sure. And with the Strait of Hormuz, that's all everyone's talking about because nobody knows what's going to happen. Mortgage interest rates have gone up. And I'm walking to a place a little more quiet, by the way. So mortgage interest rates have gone up. And so people are worried, will it last forever? How long will it last? And, this market's been very resilient. Consumers have been resilient. Our industry has been resilient. Think about what every realtor and originator has gone through the last couple of years. I mean, we already bombed Iran once on the nuclear facilities. We've had COVID for a couple years. We had the April kerfuffle on Liberation Day. I mean, it doesn't matter what this market throws at us. Everyone's been very resilient. And so, by the way, this is like the Tower Suites section. There's little peaceful fish. That guy might be dead. So I'm gonna talk about abundance in the ecosystem just again. So, you guys know the Intercontinental Exchange. They are the owners of ICE Mortgage Technology, and they own a bunch of companies. They have a ton of data. I mean, I think their biggest business is like the energy trading, platform around the world. There's so many energy exchanges that they have. They have a lot of data, and so it was really good to get some insights. Their CEO Jeff Sprecher, he talked today at the executive summit, and he talked about some of the insights about the Strait of Hormuz and, the data that goes out on how to price oil. Like they literally help price oil. They help price mortgage interest rates. They have data on so many different things, in addition to owning so many different pieces of the mortgage and real estate ecosystem. So it's a very insightful day, had some great speakers. And so let's talk about scarcity for a second. Okay. So, we talk a lot about AI. We're going to at this conference. It's a huge technology conference. It's definitely the biggest technology conference of our industry. And, what is scarce? RAM memory. There's like 100 gigawatts of power that needs to come online for all the existing data center projects to fund all of our different things around the country. And there's only like 15 gigawatts of DRAM memory available currently. You talk about copper. If you take all the data centers and all the projects and all the copper required for that, in the next 18 years, we will need all the copper that has been mined the last 10,000 years. And then, of course, we talk about oil, the scarcity of oil when the Strait of Hormuz closes. And, as Jeff Sprecher was talking about, there's like one pipeline that empties into the ocean, and there's another one, from one section of, I think it was Bahrain, that empties into the Gulf. So which side do you think everybody wants their oil shipped out of? And so how do you price that? And so it's just very, very interesting to hear, about scarcity, supply, demand, and how it relates to all this. Having said all that, I'll try and wrap this thing up. Existing home sales are good. Rates are good. Locks are up. Things are looking good for our industry, even if there's a brief pause right now. And everyone here is generally pretty optimistic about where the industry is going. So, yeah, that's it. I'll get some more data out, on Thursday, kind of maybe a debrief after some of these sessions. Pretty incredible to be here. And, maybe I'll give you a little glimpse of the debauchery in here for those that didn't make it. And if you get some FOMO, I do want to say that the stock market rebounded a little bit today because it's very volatile, right? Oh, we're going to open the strait. Oh, no, we're not. Okay. They're bombing, the airport in Dubai. Okay. No, we're going to go, their leader's not going to, it's just the headline stuff is crazy. So, inflation, we'll see what the trend is. Here we go. I don't know who's left at the bar, but see.
Oh, there's our fearless leader. Let's go. Streaming, Kevin. Let's go. We're alive. We're alive. We're alive. Hey.
Oh, selfie stick?
Yes.
We did it. All right. That was it. That was worth it. Yo! Hey, you made it. Okay. Oh, by the way, the king of LinkedIn, if you made it this far.
The king of LinkedIn.
Oh my God!
Come here, buddy.
From Las Vegas.
No. Come here. No. Seriously.
From Las Vegas, Nevada.
No, we are five,
I can't
almost
believe it.
6 minutes in. We've got
is
Greg
amazing.
Scher, Bob Tyson. We are getting after it here.
Wow.
What do you guys think of the show so far?
Incredible.
Great. Unbelievable.
That's it.
Seeing you's the
That's all I
highlight. Industry's feeling good. People are happy. People are bullish.
I agree.
I like the optimism.
I do too. See, abundance mindset with these guys.
That's it.
That's the only way to go.
I love you, bro.
I love you too.
I'm your number one fan.
By the way,
By the way, he's not responsible for your losses, only your gains. Just so you know.
Only your profits. Okay, this
Yeah.
is you're only like the third person ever that I've
Honored. I'm an honored.
No,
I'm honored.
buddy. I've been on yours, so
You have.
yeah.
Yeah.
Headlines
My
and
guy.
heaters. Headlines and heaters.
Headlines and heaters.
All right. See you guys.
Hey, it's KP coming to you live from Corona, California. Man, what a week. Really good to see everyone at the ICE Experience, and I'll go over that in just a second. It's 11:30 here on Thursday night. Get my Thursday night video out. Just a couple things to go through. We have National Women's History Month. The MBA, Mortgage Bankers Association, is doing a great job of highlighting some speakers and putting out some good content. So I definitely recommend taking a look at what they are putting out over there. And we are coming into the vernal equinox and quad witching tomorrow in the market. If you don't know what that is, it is a very volatile time in the market. You've got stock index options, index options, index futures that are expiring. These are like lots of contracts. The numbers are mind-blowing, and why it matters is because the flow of money has been very volatile because of Operation Epic Fury in Iran. Although there's a lot less drones and missiles being launched, we'll see if that can get rectified. We've got now a coalition working there. And then you also have single stock options and single stock futures. So these contracts, the third Friday of every month is a very heavy options expiration day. But when it's the quarter end, March, it's extremely heavy. This number is insane. Listen to this. $5 trillion in contracts are expiring tomorrow. $5 trillion tomorrow in one day. That's the largest expiration on record, and about 25% of the options that are set to expire tomorrow are tied to just the S&P 500. I am not a financial advisor, not responsible for your losses, only your profits. Every Friday I've been putting on and getting lucky S&P puts, betting on the market to go down. The trend seems to be for rates to go up, bond yields to go up, oil price go up, gold go down, silver go down, copper go down, and stock prices have been going down. Having said that, we'll find a bottom. And the trend will continue most likely unless something unforeseen comes out of nowhere. ICE Experience was fantastic. It was, it's weird. There are people out there that don't go. And I get that. Like maybe if you don't work at a lender or you're not on Compass, but pretty much every vendor is there in the ecosystem. And then, there's a few thousand that are integrated inside Encompass. And so, I don't think people realize like there's thousands of people that attend, and it's, maybe not everyone who watches my content, maybe it's not for you, but like the tracks that they had there, Encompass admins, cap markets teams, C-level executives. I mean, it goes on and on. So many different meetings set up. The scope to set up that conference is unbelievable. I mean, it's the biggest conference in our business, and so it's over. Hope you had a good time. If you're having FOMO that you missed out, you can come to the Mortgage Innovator Conference in May, the California MBA. It's like a mini ICE is where we're trying to take it. And ICE will be there, by the way, as a sponsor. So a great event. I could go on and on. Lots done. I talked to so many vendors who said, I landed this monster account, or I finalized this deal. I have 20 more contracts. I have so many meetings. It is just good if you are in lending and you actually, do loans, and so I think it's important to be there. Okay. Fed met this week, Fed week. So kind of a busy week. It was kind of funny. I listened to the press conference before I walked down and had a late lunch on Wednesday. And they said, Chair Powell said, if we could skip a dot plot, this would be the one to do it. They don't know. They said, we just don't know. So uncertainty has re-entered the conversation at the Fed level. And I've been saying pretty consistently, we have a lot of fiscal stimulus. The first half of this year, there's over $100 billion in refunds coming from the IRS, which will get pumped into the economy, even though the last GDP number was low. But that's mostly due to exports, although in January, high imports, although in January we had high exports. So could revise Q1 up. The Fed puts out their dot plot, the summary of economic projections, every other meeting. They meet every 6 weeks or so, and then every 12 weeks they put out a dot plot, and this is the one they wanted to skip. But they had GDP coming down in 27 and 28. They pushed out their rate cut expectation to just one, and likely in December. I've been saying I think they're going to cut in September. So, they mentioned that tariffs had not had the effect that everyone was so fearful of back in April. There is sticky core goods inflation, which is related to tariffs, but I get some great data from the team at Mizuho, and prices paid really haven't risen that much, and so that means that maybe intermediaries and other parts of the world send their goods or eating some of those costs. Of course, oil has been a blessing. They say it's volatile, and a lot of these core readings of CPI and PCE, they strip out food and energy because it's volatile. Well, both of them are acting, very volatile right now with the conflict in Iran. Fertilizer is needed to grow food. Certain countries are really tied to Middle Eastern oil. So even though Iran produces something like 1.2% of the 20 million barrels that go out every day, they control the strait. And I want to read something to you and tell me what you think I'm saying. I read this in one of my articles that I subscribe to. Damage is already accumulating. The stock market is down more than 11% since the conflict began. Import costs are surging, trade deficit is widening, and inflation is accelerating, all while the currency weakens, making everything more expensive still. Talking about Japan. Japan's an island where 95% of its energy comes from somewhere else, and 70% of its oil comes just from Iran, which is why their prime minister was speaking with President Trump today. And by the way, they're part of that coalition to try and secure the Gulf, the Strait of Hormuz. And so, different countries are impacted. Europe is highly impacted by this. China, India. There's a lot of places around the world that get energy from there. Of course, we're very blessed to be energy independent here in the U.S., but we're not immune to it. There's the price of oil, and there's the future price of oil based on contracts. And so there is a difference. So when you see, $170 oil, well, that's like a cash Saudi Arabian oil price. By the way, highest price ever. But here at home, we're still in the low to mid 90s, and it's been volatile. And Having said that, the 10-year Treasury is still in the range it's been in for months, basically between 4% and 4.30. Now, it kind of ticked up out of that 4.10 to 4.20 range in the beginning of the conflict, and now it's between 4.20 and 4.30. So we talk about these ranges that the 10-year Treasury trades in, and interest rates are up. Having said that, locks are up. It's spring purchase season. And so, people are very good. Originators are very good at getting their strike rate, as the MBS Highway team likes to say, getting ready to strike with the rate appears that is the best benefit for the borrower. And pipelines are full right now. So we're noticing it here, and I'm sure we're not the only one. Some other stuff that come out of the Fed meeting, which I think is important. The unemployment rate is the ratio for observing labor supply and demand. And so, yes, companies aren't hiring as much, but we've closed our borders. And so there's not as much labor supply that needs to get a job. So it's tough if you don't have a job getting one. It's tough if you're right out of college. AI is kind of a part of the conversation. It keeps, coming up in the Q&A session for the Fed meeting. But that, of course, will grow worker productivity. The last thing I'll say is the chair said, Powell said, productivity has to go up to hit their 2% GDP goals next year because the stimulus from One Big Beautiful Bill will be gone. So what else is new from the big bond sales team over there at the Fed? Well, our national debt is at $39 trillion. So it hit $38 trillion 5 months ago and $37 trillion 2 months before that. And now we have a $200 billion ask by Secretary of Defense Pete Hegseth to fund this conflict and make sure that we can resupply all the missiles and fuel and everything else we had. And not to diminish that, I mean, we're still losing lives. I believe we've lost 11 lives. Someone correct me if I'm wrong. I have not been doom scrolling. It's very sad, obviously, to see that. It makes you stop and pause when you're out networking at an event in Vegas and people are putting their life on the line to help stabilize the Middle East forever, hopefully. PPI was up. Producer price index is up. Energy had a little bit to do with that. And again, energy's been great for about 14 months or so, and now it's a little volatile. And so there's some uncertainty. The fog of war has not been lifted. And so we'll keep an eye on that. Now, AI still is booming. I did a video last week talking about we've got about 100 gigawatts of data centers, in the process of being built, which mostly uses natural gas. I was on a ski trip a couple weeks ago, and I happened to be in the gondola, the Red Pine Gondola, for those familiar, that goes in between canyons in Park City, and talked to some guys who do construction for data centers, and they're like, look, it's mostly LNG, natural gas that funds those data centers. However, memory, Micron, SanDisk, some great stocks. Been in Micron for quite a bit. It's killing it. Just reported earnings yesterday. Tripled their business. I mean, literally tripled their sales year over year. 83% profit growth. I mean, just blew it out of the water. Kind of a buy on the rumor, sell on the news. I'm holding. But there's only enough memory for like 15 of those 100 gigawatts of power in those data centers. So we need more memory. And so there's some scarcity there. Just like, there's a little more scarcity in the oil field. So, something to keep an eye on. A lot of talk about AI at the ICE conference. A lot of great vendors out there putting together some good stuff. Explosion in AI training and inferencing and the broader push into agentic AI are driving a shortage of memory supplies. Agentic AI is where a lot of these tech teams are going. I've seen some really great ones. Talked to Blend today. Blend has a great agentic product they have out there, and Nima and John and Caitlin and team, did a great job. So there's this agentic approach, not just like a large language model or coding or creating tools. You have agents, maybe like a master agent that manages other agents to go around and do stuff. And so, a lot of us talk. There's a lot of talk that our phones are going to be our agent. hey, phone, I have to book travel to the Zactus Customer Advisory Board in a week, and I need a rental car from the Sacramento airport on Wednesday morning at 8:30 and returning at 2:30 on Friday afternoon. That's a real thing. I tell my phone that, the agent goes and does it. That's it. I'm done. I mean, now what I'm going to do is on my 35-minute drive home when I'm absolutely exhausted after midnight, snacking on some gummy bears here, my last little snack. I know I try not to eat anything. I may save it. I would know I'm going to go online. I'm going to book that, right? But our phone is going to be our agent, and agents are a way that a lot of AI projects are being done. So it's kind of going beyond building tools, building software, large language models, answering questions. Agents, it's so crazy that there is a website called Rent a Human. So agentic AI bots have a website and are putting out like, hey, for $200, hold this sign up, in this square in Tokyo, and send us the photo. Agents are hiring humans now, and like tons of people are signing up. So now we work for the agents. It's happening. Go check it out. Rent a Human. Trade deficit plunged, like I mentioned, and that's a good thing. And that should up our GDP for Q1, which Atlanta Fed has us at 2.7%. So Venezuela, Iran, and now Cuba is faltering. For those that Cuba Libre, my last Lyft driver from the Win going to the airport yesterday is Cuban, and he also, he plays congos. We talked about percussion. I banged on drums a little bit. Trust me, I could just keep a beat. That's about it. But he was excited, and so things are falling, things are happening, and ultimately for the right reasons, even if it's a little messy along the way. So that's it. That's all I got. Long video. Have a wonderful weekend. Beware of quad witching. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.